time to turn our focus to Microsoft. Ahead of the earnings that are due out at the end of the month, I welcome in Angelo Zino, Senior Equity Analyst at CFRA Research. So the earnings are due on October 30th. It'll be first quarter. You do have you have a top pick within the software space of Microsoft. So you like this name. Where do you think it's headed and why?
So yeah, you're right, Nicole. We have a strong buy recommendation on the name. It's one of our favorite or top names within the software arena. And our 12-month target price is $490. That represents, some notable upside from these levels here. And a big reason, how we come out with that $490 target price essentially is a 30 times multiple to our 2026 estimate. So as we we look 12, 13 months from now, exiting the calendar year, you put a 30 multiple in that year ahead number, and that's how we kind of come out with that target. It's in line with historically where the stock has traded here over the last 5 years or so.
And it's all about AI, right? The AI services that it can contribute to Azure, and every single sentence I read on different categories, there's some sort of AI line in there. It's really across the whole gamut, isn't it?
Yeah, for the most part, you're right. And that has been the case really for, all these kind of Mag 7 names here over the last, 6 to 8 quarters. But when you look at Microsoft specifically, there's, I guess, 3 key areas that we're looking out for here on the call. First and foremost, it's the Azure number, right? So that's the first number all investors are going to go to. We're looking for a growth rate of about 33%. It's a slight deceleration from what you saw in the prior 2 quarters, and that's after kind of restated numbers or announced restatements that they cited back in late August. So that said, as we kind of go towards the December quarter, there could be some disappointment on the Azure side of things, but more importantly, what we've told investors is look into the first half of 2025. Blackwell is going to ramp within kind of Microsoft's Azure platform, and that should help kind of that cloud business reaccelerate. The second thing we'd be looking out for is kind of a new segment that they created, their Microsoft 365 commercial cloud business, where they're essentially kind of taking anything kind of tied to the commercial cloud, including any kind of growth opportunities, associated with Copilot. Within that business, we're looking for about 15% growth, but it's all about kind of what they have to say, at least qualitatively, in terms of kind of the Copilot opportunities out there. Investors initially kind of at the start of this year, we're hoping the second half of this year is where we would really see kind of massive Copilot adoption. It's probably taking place slower than most anticipated, but it's an area we're still optimistic about. And the third thing you have to look out for, of course, is the capex spend number. Everyone's kind of making sure that they're going to, hopefully kind of, keep kind of capex spend at a prudent level here. And that kind of remains to be seen. Our view is probably biased to the upside, but nonetheless, I think we've kind of seen at least most of the announced kind of increases really hurt the stock price at these levels.
Look, AI spend is important and costs a lot, and you said you want them to be prudent. It may come in above expectations, to your point in some of your notes, and that could pressure sentiment. So it sounds like it's a really fine line. You want them to spend to grow, but not too much?
Yeah, listen, when it all comes down to it, you need these hyperscalers to continue to spend aggressively. You need them to continue to see the top line do extremely well, that being cloud growth and, digital ad spend growth specifically. Those are the 2 most important themes out there. As long as you continue to see some decent growth from those 2 themes out there, you should hopefully see kind of higher capex spend from these companies, because they need to spend more in an effort to kind of increase capacity, and that increased capacity will lead to higher revenue, specifically on the cloud side of things. Our view over the next kind of 3 to 4 years, Microsoft's cloud business should more than double here. So the opportunity is there. The growth potential for Microsoft remains there. They're going to need to continue to spend. You just don't want them to kind of get to a point where capital intensity rates get kind of egregious in nature. Let's call it north of 25% or so. So we think the levels right now are okay. You just don't want them to kind of surprise to the upside in terms of spend.
So when we think about, sometimes we worry about the pressures and the risk and recession and maybe not a soft landing. I mean, there's the sort of bull case scenario where the macroeconomic conditions can improve. And how could that help Microsoft? What would happen in the, what supply would come? What would, how could this boom?
Yeah, I mean, listen, that's a good question. I think, and I think this is an important point here. When you kind of think about the first 12 months after an interest rate cut, most people don't realize this, but the best performing sector since 1990 has historically been the tech sector. And actually, when you look within the tech sector, the actual best performing sub-industry has actually been software within tech the first 12 months after an interest rate cut, which is kind of where we're at here. Software has underperformed here over the last kind of 12 to 18 months. So we do think kind of there's somewhat of a catch up over the next 12 months for software. But as far as kind of maybe your point out there, as we kind of see interest rates come down, especially from elevated levels that they have been here over the kind of the last 2 years or so, that hopefully frees up budgets on the enterprise spend side of things. And if that does free up budgets out there, you would think the enterprise space is going to favor increasing spend on the AI side of things. And then if that happens, clearly you look at a company like Microsoft out there kind of being the enterprise king out there and, being a huge kind of driver of their business out there being AI. So I think you can kind of point to the fact that if the macro holds up and even potentially, more importantly, if interest rates start to come down and some of those enterprise companies out there have the ability to kind of invest a little bit more, some of that money or a lot of that money potentially goes into Microsoft.
So if you're to have a well-balanced portfolio, you don't want to have too many of one kind of tech. You're talking about software doing well, particularly after a rate cut. So maybe Microsoft would be the software name since that's your top pick in the group. What else would complement in a tech portfolio a name like Microsoft?
Yeah, and I'll throw another software name out there. A name that we do like a lot is Salesforce.com. It's a name that's really kind of come back strongly since kind of hitting their lows back in May. But you actually specifically look at what they've done since mid-September when they had their Dreamforce conference out there. It's a name that's performed extremely well. They've kind of got this agentic AI theme that's out there. So it's a name that's really starting to capture some interest out there. And we think there's actually AI monetization potential on a name like Salesforce here going into 25 and into 2026, where they've kind of lagged here over the last 2 years. I'd say kind of, outside of, some of the kind of the system software type names out there, like a Microsoft, you kind of want to still be exposed on the semiconductor side of things. We do think you're kind of still early days in that kind of new industrial revolution out there. So some of the key areas that we've kind of pointed out to in the past in terms of the kind of the semiconductor theme out there, whether it be on the compute side of things like an Nvidia or an AMD, whether it be a Micron on the memory side of things or a Broadcom or a Marvell more on the networking side of things. Those are names you kind of do want to be exposed to. You want to be exposed to some cyclical names on the semiconductor side of things as well, like an NXP Semiconductors. And then on the hardware side of things, we think, investors should continue to look at a name like Apple or Dell, where we think they will be kind of key beneficiaries of the AI theme.
Yeah, wow, you covered the gamut. That was good because I wrote them all down. And then, we'll have the battle for $4 trillion. Which company will get that, the Apple, Microsoft, Nvidia, that's always the ongoing race too. Okay. Angelo, I won't even make you pick. Do you want to pick? Which one hits it first?
I mean, listen, if we're looking 12 months out here, I think, the name that I would kind of say it should be the front runner out there is Nvidia, because they've got that Blackwell ramp taking place, and they're the ones that have the most upside in terms of the earnings trajectory. But listen, you can never rule out either Apple or Microsoft and their free cash flow potential in their business model.
Yep. Okay. Good to see you, Angelo. Thank you so much. Always a pleasure to chat with you here.
All right.
Angelo
Zino,
Senior Equity Analyst at CFRA Research. Thank you.